Hi there, welcome to another episode of the Art of Business English. Andrew Ambrose is here, your host, for a little impromptu episode today outside because it's a beautiful, beautiful day here in sunny Spain and couldn't bear sitting inside to record this one. So I'm going to do an impromptu one. So we're going to be looking at a lot of the vocabulary that's been doing the rounds, I guess you could say, in media or on the news, on the financial news. Some of this vocabulary you may have heard may be a little bit confusing or you're not really sure what it means generally. So I'm going to go through my little list here. It's like pretty impromptu. However, I think it's going to offer a lot of value because, yeah, there's a lot of it going on. And I'll give you a little bit of an explanation of each one as well. So a bit of context. We are in, May of 2022. We've gone through a big boom cycle after the COVID pandemic started in 2020. We saw a lot of central banks basically pumping money into the economy, and they have what we call loose monetary policy. Loose monetary policy means that they are very accommodating. That meant was that we had a really positive bounce back at the end of 2020. And 2021 was epic. Lots and lots of returns, tech stocks, things like that were just at all-time highs. Now, however, as a result of all of this stimulus, so stimulus is the money that central banks have pumped into these economies to help keep economic activity up and positive. All of this influx of money and liquidity in the system has now led to, surprise, surprise, inflation. If you print money, it's not rocket science. If you print a lot of money, then the knock-on effect is that you get inflation. And there were some pretty big stimulus packages passed by not just the American Federal Reserve, but the European Central Bank and many others around the world to help prop up the economy. So now we have what I like to call the COVID-19 financial stimulus hangover. Now, a hangover is what happens when you drink too much. You wake up the next day feeling pretty rubbish. And that's what we're going through now, which isn't much fun. It's not much fun for investors, and it's not much fun for the general public because of inflation. So the prices are up and everything's expensive, etc., etc. And of course, that has not been helped by the war in Ukraine. However, inflation was already a problem before that started, so we can't just turn and blame that. Anyway, let's look at my list of vocabulary. The first one is stagflation. Now, stagflation's become a very popular word lately. Stagflation is like the combination of two words, stagnation. Now, when something stagnates, it doesn't move. So like water that's stagnating is water that has stopped in a river and there's no flow, so it just starts to change color and stagnate. You can't drink water that stagnates because you'll probably get sick. Now, stagnation is also in the economy, so it's when there's no growth or negative growth. So stagflation is when we have a strange occurrence where the economic output or the economic growth is flat or falling, but at the same time prices are rising because of inflation, which is a bit bizarre because normally if there's low economic activity and growth is falling, then prices fall because there's less demand. However, that's not the case. So we're in a nasty situation of stagflation. So we're in a position where growth is falling, but prices are rising, which is not very cool. The next one on my list is tightening or loosening. So tightening or loosening. So to make something tighter, your belt, you can make it tighter, or you can loosen your belt. So when we talk about tightening or loosening in financial terms in English, we talk about, or we relate it to the federal, or the Fed, the US Fed, or the European Central Bank, or any other central bank. They change their policy. A tightening policy means they're less accommodating, so they're not buying bonds. They're not injecting money into the system. They're actually trying to take money out of the system, and they also are increasing interest rates. So that's tightening. That means that that economic conditions are not loose. Loosening is not the opposite. It's when you allow money to flow into the system and create liquidity, and then people can start getting cheap loans, and companies can make investments, and everyone's happy. When there's tightening, interest rates go up. The cost of borrowing then goes up. So, you know, if you want to borrow money from the bank, it becomes more expensive, which then creates less like loose money. So the money becomes tight and more difficult to obtain. And therefore, companies generally do less or make less investments when there is a tightening cycle compared to a loosening cycle. So we've gone from a loose monetary cycle to a tight we're tightening. We're in the process of tightening now. It's May, so the Federal Reserve just increased interest rates by 50 basis points. Now, basis point is like one point of a to make up a percentage. So 50 basis points is actually 0.5%. If they did a 75 basis point increase, then that would be like 2/3 of a percentage point. And if they did like 100 basis points, then you would get a 1% increase in interest rates. The Fed recently, in its last meeting, just increased their basis points by 50. So it's 0.5 percentage point increase. So that's what a basis point is when you hear about people talking about how many basis points will the Fed increase rates. They don't talk like along the lines of 1% or 2% or 0.5%. They do generally say that, but if you want to be really specific, they say 50 basis points. Okay, so if you've heard this term basis points, that's what it means. You know, it's increments of 10 of a percentage point. Okay, another common expression that we're hearing lately is hawkish, dovish. So a hawk, you know, the animal's a hawk, so the bird, a hawk, and then a dove. So a hawk is seen as more aggressive, and a dove is seen as more peaceful, you know, like we associate peace with doves. The Fed has been dovish up until now. Dovish means it's like related to this loose, you know, very accommodating policy in terms of its financial policy towards the markets. However, it's becoming more hawkish. Now, a hawkish Fed means it's tightening its policy. It's going to increase interest rates and be less accommodating towards financial markets. So you've probably heard this expression hawkish and dovish. Okay, so we're going from a dovish cycle into a more hawkish cycle. This is a very common, fashionable term that people use nowadays. So now we have a more hawkish Fed. Okay, another one. This is related going back to the basis point. You've got rate hike. Now, hike is, you know, you can hike when you're I'm going hiking with my family in the mountains. Not the same. To hike something is to increase it. So if the government says they're going to hike taxes, it means they're going to increase taxes. If you're going to hike prices, it means you're going to increase prices. And if the Fed says they're going to do a rate hike, it means they're going to increase interest rates. Okay, and that's what they've done. And they're probably going to do some more. Now, when there is these changes to Fed policy, there are also effects to the financial markets. After the rate hike of 50 basis points last week in the May meeting of the Fed, funnily, there was a rally. Now, this word rally is the next word on my list. Now, a rally is when stock markets go up. It's like, yay. So after the Fed said they're going to increase the interest rates by 50 basis points, the next day there was a stock market rally. Markets went up, like I think it was the biggest increase of the year in one day, and there was this massive market rally. Then, surprise, surprise, because that's what's happening lately, the next day, and then continuing this week, yay, we had a sell-off. And a sell-off is the opposite to a rally. A sell-off is when people start to sell shares or funds or whatever, that they sell their financial assets, and that creates the market or causes the market to go down. And so that's the opposite. You've got a rally or a sell-off. Okay, I like rallies. Everyone likes rallies, and some people like sell-offs because then you've got an opportunity maybe to buy something cheaper. Okay, so remember, people are not logical. A lot of the things that are bought and sold in the stock markets are done by computers or algorithms. So when there's trends going down, people can get nervous and all start to sell. They move like sheep. And what's interesting as well, there's a very interesting expression which maybe we should all listen to. Sell in May and go away. sell in May and go away. Sell in May and go away basically means that, you should sell everything you have in May, keep the money in your pocket, and you'll come back after summer, because then you can go away over the summer and not be stressing and worrying about the markets and the volatility. And that's another word on my list, volatility. There's a lot of volatility. Volatility is when markets go up and down, up and down, up and down, but not a little bit, like quite dramatically up and down, up and down. So market volatility is also very characteristic of the times we're living in. Okay, and my last two words on my list are upside and downside. So when we look at the upside or the downside, we look at the positives and the negatives in relation to risk. So you can have a lot of upside, and that means that you see growth, or you see lots of potential for growth in your portfolio or in your assets or in your investments. The opposite would be downside. At the moment, people are seeing a lot of downside risk to investing, because we're expecting the Fed to increase interest rates again by another 50 basis points at their next meeting. And we're going through this tightening cycle. And when the Fed tightens the economy up, generally it leads to less economic growth. However, it should try and slow inflation. So that's where we're at. And that's what is some common vocabulary that we hear these days with when listening or reading to the financial news. Now, disclaimer, I am not a financial advisor or planner, and I'm just giving you this lesson based on my understanding of what's going on around me. So these are just, market trends, and this is the vocabulary that goes or accompanies these discussions that are going on around me and around us at this time. So I hope that helped you understand a little bit about what some of these terms and expressions mean, and a little bit about what's happening with the trends in the market at the moment, and maybe why there is a lot of inflation going on around us now, and why prices are higher. And what's the irony of the situation? Well, people can blame the governments right now who are in power right now, but a lot of these inflationary pressures that we're seeing now are the result of decisions that were taken during the pandemic to help keep the economy afloat and prop up the economy while people were going into lockdown and while there was a major contraction because people were stuck at home and couldn't go to work. So before you start blaming, everyone around you right now, think back 12, 24 months and, maybe you received money from your government. Maybe you received extra money in your pay packet because of some stimulus that was given to you by your governments. No one complained then when they were getting lots of money pumped into the system, but now obviously these are the consequences. Everything has an equal and opposite reaction, and what goes up must come down, but what goes down must come up. So let's stay positive, and always remember that you need to be in these things for the long run and not to stress out too much about the highs and lows. So that's all, people. I hope you've enjoyed this impromptu lesson in my back garden in the lovely, glorious spring day of May here. And I'll see you all next week for another episode where I'll be giving you some vocabulary to help you express yourself better in English. As always, if you did like this episode, share it with your friends. Give me some feedback, post, send me a speak pipe, whatever. I'm good to go. I just love to hear from you guys and gals, and I hope I'm helping you along your journey to improve your business English. So that's it from me. Take care. Bye for now. See you all next week for another episode of The Art of Business English.